It's the 17th of May 2022 and the market is down, everything is down. In fact, if you have a look over the yearly chart, this is a really cool site. It's called cryptobubbles.net, and the way you customize it is you can make the content performance and the bubble size the market caps. So the bigger the market cap, the bigger the circle. So as you can see, Bitcoin has gone down over the year 19.1%, Ethereum minus 17%, but the next biggest one, the next Hex is the one that is the winner with 134% up. That is one of the top 10 crypto. So you can see the detail here as well. See, that's a yearly, monthly, and as you can see, Hex is up on the year 134. So it's days like these that you actually really have to look, who the winner are, and obviously we like to invest in the one that is, is the winner. Of course, none of this is financial advice. It's only just my understanding, and you have to make your own decision based on your research. But this is a very interesting interview between the founder of Hex, Richard Hart, and Kitco News. Yeah. And it talks about Bitcoin will crash 85% from its all-time high. So the all-time high is up here at 69,000, and if it goes down 85%, we are looking at about a $10,000 mark. Is it going to go there? Well, Richard thinks it is, but only time will tell. But in recent time, we have seen a crash, this one here. In fact, what is interesting thing is on the 5th of this month, I was actually looking at Luna. And I was looking at Onomics, and I was looking at Luna's market cap, and it was 30 billion. So this is one of the top 10 crypto. And Hex was 27. And the yearly increase was 412% compared to Hex 411%, and this was 5th of May. So that's only 12 days ago, and things have changed so quickly. Like no one would expect something in the top 10 would drop to zero. Look at it now. It went from all-time high of, let's have a look here. That would be $120 all the way down, basically zero. It's been delisted anyway from Binance. So people that were in, this made me think about the whole space. Like this could happen to any crypto. And those who invested in it would have seen a big increase from the all-time low to the all-time high of 2,429%, which is basically 25.2x. So when one strategy is, if your holding has increased 10x, it's good to sell 1/10 of it and get your money, your initial investment out, and then go and invest in a different class of asset, perhaps not in crypto, maybe in stock, maybe in property, in something else altogether. So if this thing happens and then your crypto goes to zero, you've still got another class of asset, perhaps it's shares, perhaps it's property, or business, and so you're not having all your eggs in one basket, and this is probably a very good strategy. Obviously this is no financial advice, And if you look across to the stock market world, this is basically 1 year performance of all the indexes, US anyway, US indexes. So you can see everything is down. You know, the S&P 500, the SPY, is down 3.7%. And the QQQ, which is NASDAQ 100, down 8%. The Dow Jones is down 6.07%. So say if you know, obviously you've invested in crypto, and then you now want to diversify into shares. I mean, this is how I would be looking at picking the winners. You know, in time like this, when everything is down, you go into S&P 500, and then you go into 1 year, and you can see who the true winner is in the last 12 months. So the size of this square is the size of is relatively, it's correlated to the size of the market cap. So obviously Apple is the biggest market cap. It's gone up 15.26%. Microsoft 6.66. This is Warren Buffett company. Berkshire Hathaway up 6.94%. And obviously some of the oil is doing very well down here, I mean, which you probably, you know, you'd never want to invest in that. Renewable is the one to go. That is the winner. 25.58%. You know, even on a down day, I mean, overnight Tesla has dropped 5%, but it's still up overall. So this is how you can pick winners like this. Even Amazon is down 32%. So, and it is in a sector that is growing. So there's a lot of potential there. There is one way you can look at the Tesla stock price. This is something that probably no one look at it this way. Okay, if you look at the daily chart, most people would, you know, be very familiar with this daily chart. But you could actually turn it to a weekly. Okay, and now if you go all the way back 12 years ago down here, okay, now let's most people, when they look at chart, they don't actually turn the log chart on. So most people, when they look at Tesla chart, they'll be looking at it this way, like that. Okay, so can you see that in the early day it's all a straight line, and then it goes up? So for exponentially growth company like Tesla, you need to look at it on the logarithmic chart. Okay, so all that flat line in the early days is now not a flat line. Can you see that? It's no longer a flat line. See, from here to here, now this is March 2013 to up here, March 2014. That's basically a year. In 1 year it went up 689%, or 7 to well, that would be 8x, because 100% is 2x, so 700% is 8x. It went up 8x in 1 year. But then if you look at the whole 12 years, you can draw a trend line, this rate trend line here. Okay, and then you can see that it went sideways for a long period of time, and then big jump up, and then after that, what happened? It went sideways again, and this sideway went for 2058 days. Now how long is that? 2058 days divided by 365 is 5.5 years, 5.6 years. This is a very long time for the price to go sideways. But fundamentally, the company is still growing. It's still innovating, it's still growing, but the price may not necessarily reflect that. So when you have a sideways movement going across that long, it's bound to go up again. Yep. And then now it could chop sideways again. Who knows how long it's going to chop. But eventually you would expect it to grow and catch up to this trend line again. That's how a exponential growth company would perform. In fact, there is, if you have a look here, Tesla investor relation. If you go to their website, this is how you can see whether this company is actually good long term, because they actually report their quarterly figure here on this site. So every quarter, the week after the quarter ends, they will announce the delivery number, and then in possibly the third week, they would release their so they will release this one, the production and delivery number, in the first week following the quarter, and then the earning report will come out in the third week. So if you look at the Q1 report of Tesla this year, and the key that we want to look at is obviously the revenue growth as well as the margin. Those are the two figures that I'm most concerned with. So you can just Google Tesla investor relation and you come to this page. And you can have a look here. Automotive revenue year on year went up 87%. That is amazing. I mean, Elon is talking about a 50% year-on-year growth. So if the revenue is going up at that rate, and what is, I mean, obviously company can discount, cut their price in half. The revenue would possibly double, but doesn't mean that their profit margin will go up in the same percentage. But if you look at the profit margin of Tesla, let's have a look here. The margin is 32.9%. Can you see that? 32. Now it started off as 26, went to 28 here, then 30, 30.6. It's going up. So which means every car that they sell, they're making more and more. So this is a good sign. Even though they might be cutting the price of the vehicle, they might be selling it cheaper, but the gross margin is still increasing and the revenue is also increasing. Now that is a very positive sign. So if the share price, if the revenue is increasing at 87 or at least 50%, you expect the share price to go up at least 50%. But unfortunately, the market is very irrational. It doesn't always follow the actual performance of the business. So it may take a while before the market will catch up. But if you look at the long-term trend line, this is where the company is going. And this is amazing growth. If you look at it, let's have a look here. We are in May. Okay, May. Okay, 16th of May 2011 to now. That is 17,657% increase from 2011 to 2022, from May to May. That is a sort of growth. This is what we call a generational company with exponential growth. The only way you can truly see this sort of growth is actually turn this logarithmic chart scale on. Otherwise, all you're seeing is nothing but a flat line. It's called a hockey stick chart. Yeah, logarithmic is the way you see it. So I hope that helped. So this is one way you could diversify from crypto. Put some in another in a company. So when you're buying shares in a company, you're investing in a business, and you were not trading. One thing that Richard has taught us is this: ladies, liquor, and leverage are how smart men go broke. I would go as far as saying, ladies, liquor, and trading are how smart men go broke. Yeah. So trading and investing is different. Trading is, you think you want to buy cheap and then sell high, so you're actually betting for the market to go up. So, and we know what happened to people who bet. They lose it all, don't they? So you are actually speculating, you are betting, you are not investing, because you want to sell high and you want to try to buy back in when it's low. That is not investing. Investing is a bit like this. I've got friends who are dentists and physio, they're doing very, very well. I go and approach them and I say, do you mind selling 20% of your business? And if they say yes, I'm hoping that some of my friends will say yes, but if they do, they will say, okay, let me value this business, get an independent valuer, I'll value it. Okay, 20% will cost you, say, X amount. It could be 100,000. Okay, I'll put 100,000 in there. Now, what happens if there's a lockdown? The surgery is closed for 2 weeks. Do I panic? Do I go up to him and say, how's your sale last month? How's your sale last quarter? Is it going down? Okay, maybe I should sell my shares. That's not how we invest. That's not investing. That's trading, isn't it? I just invest 5-10 years. I'll come back in 5 years, have a look. Yep, you're still doing well. Excellent. That's how investing is. We're there for long term. 5-10 year time frame. You're investing in a good company, in a good growth company, and like Warren Buffett said, he studied the company, and then once he put his money down on those companies, he said the stock market can close for the whole year. It doesn't affect him. He doesn't matter if the stock market is shut for the whole year. He knows his business is growing and performing well. Yeah. And then the value of his investment is going up. There's a very good piece of advice, financial advice actually, by Elon. In one of his tweets, he says, since I've been asked a lot, buy stock in several companies that make product and services that you believe in. Only sell if you think their product and services are trending worse. Don't panic when the market does. This will serve you well in the long run. So I'll leave you with that, and I hope you liked the video. Subscribe if you enjoy this sort of content. Thank you.